Let's talk about everyone's favorite topic, Tesla stock split. So today's January 6, 2022. Tesla stock is currently trading around $1,060, $1,062 as of the date of this recording. Now, as we all know, Tesla stock has already split once before. It was nearing the $2,500 mark, and it did a 5-to-1 split, which allowed the stock price to go down to about $500 a share. And ever since we hit that mark of $500, there's been a lot of talk about, okay, when is Tesla going to split again? It's, we just hit $1,250 not too long ago as of the date of this recording, and it's been a lot of talk about, okay, so Tesla should split again, right? But I think it's important to understand why Tesla would need to split, right? What's the mechanism that would be required for Tesla to want to say, let's go ahead and split our price? Generally, it's helpful to think that stocks will split to try and allow the market to have an easier entry point for those that can't afford to spend, a lot of money on one share. It has been a new phenomenon, especially with Robinhood and other different things sort of innovating in this area and sort of putting pressure on the markets to try and do fractional trading where you could potentially buy a portion of a stock like 1/10 or 1/15 or something like that. But that's not the case across the world, and there's a lot of regulations around that still in the broader markets. But really, on my mind, I think there's only one big reason why Tesla stock would split, and that has to do with the employee stock purchase program at Tesla, more commonly known as ESPP. So for those that don't know, an employee stock purchase program, which is not unique to Tesla, this is actually something that's super common for publicly traded companies, especially in the United States, is a program where an employee can take advantage of a discounted stock price for the company that they work for. And usually the way a program like this would work is that an employee has a choice up to a certain percentage to take a percentage of their paycheck and put it into a savings account per se. And then after about 6 months or so, that money is used to buy the stock of the company at a 15% discount, or maybe less or maybe more. Tesla's is at a 15% discount for the employee stock purchase program, and an employee can put up to 15% of their salary post-tax earnings into this escrow account. And the price that would be chosen to figure out, which price gets that 15% off is the lower of the opening date of that window or the closing date of that window. So let's say on March 1st, the stock price is $900, and then September 30th, the stock price is $1,200. The way that 15% would be assigned as a discount, it would take the lower of the two, so the $900 price, and then you would apply a 15% discount, which would then allow the employee who has saved up potentially, $1,000 or more in that account during those 6 months, depending what percentage they decided to assign for how much gets taken out of their paycheck, they'd be able to buy the stock price at about $765 a share. Now, the reason why the ESPP is such an important variable of figuring out, when Tesla would split their price is because if the stock price gets too prohibitively high, not even employees will be able to purchase stock from their own program. And so for that, I have a very basic example to go through so that we can all get on the same page. So I try to come up with very realistic numbers as to what an average employee would make, okay? And given that I worked at Tesla for 4 years, I have a very good understanding of what the makeup of the workforce looks like. Of course, I don't have any data around how much people make per se, but you can probably use some pretty accurate assumptions to try and figure out what that potential workforce could make. And the number I landed on for an average Tesla employee is about $55,000 a year pre-tax. And the reason why I picked that number is because Tesla has 100,000 employees, and a huge majority of those are going to be those within a pay scale that's more closely related to like a factory worker or a salesperson that would get paid from a base perspective a pretty decent living, but nothing that would be in the six-figure range or anywhere close to that. And so this would include factory workers, this would include line workers, technicians, things like that. And the one key thing to remember about an ESPP is that any additional stock compensation that you would get at a company like Tesla is not part of that base salary. So those funds are not eligible to be drawn and put into an ESPP. And so even though Tesla employees might be making well over $55,000 a year, including their stock compensation, those funds would not be able to be allocated to the ESPP. So let's take that $55,000 and assume taxes all in for that person, especially if they live in a state with a high state tax like a California or something like that. Let's assume it's about a 30% hit from a tax perspective, which will then lower their net pay to about $38,500 a year. Obviously, this is very different state by state. New York, Pennsylvania, Texas, California, there's some very significant impacts as far as what that net pay would be. But let's assume for this example, 30%. Now, if you take that $38,500 and you divide it by 26, which is the number of paychecks a typical person would get in a year, there's 52 weeks in a year. 2-week periods usually is when people get paid, so there would be 26 of these periods. So each person's take-home pay, which is after taxes are taken out, will be around $1,480. Now, that $1,480 number is what's used to figure out how much gets drawn into the ESPP account. And at Tesla, an employee has the option to choose up to 15% of their salary to be put into that account. And so if you choose 5% as an example, there'll be $74 that gets taken out of your paycheck. If it's 10%, it's $148. And if you choose to go the highest rung, which is 15%, it'd be roughly $222. Now, why are those numbers so important? So let's fast forward 6 months, right? Tesla's windows are every 6 months, and they start in, I believe, March 1st and they end September 30th. So that's a 6-month window, so 13 paychecks, right? 26 paying periods in a year divided by 2 is 13 total paychecks you could get in that window. Those 13 paychecks will be drawn and placed into that escrow account. And if you're drawing it at 5%, that's roughly $960 that you would have access to be able to purchase stock at a discount. If it's at 10%, it's roughly $1,925 or so. At 15%, it would be well over $2,800, so $2,887 or so. And then 7.5% would be about $1,443. And so if you take those numbers that I just listed for each one of those percentages, and then if you compare that to the stock price, you can see that if the stock price gets beyond a certain point, call it $2,000, that becomes prohibitively expensive for a lot of staff to be able to put money towards that ESPP. The one thing we have to remember is that even though these folks work at Tesla, and yes, a lot of them could make a very good living out of it, there's still expenses that they have to deal with. So it becomes really difficult for some of these folks potentially to get into this program. And the one thing that was very clear for me when I was working at Tesla is that Tesla tries to do a really good job of making sure everyone has access to their programs. And so if the stock price goes too high where the employees can't take advantage of the ESPP essentially becomes useless. Nobody can take advantage of it. I think that was one of the biggest reasons why the initial split happened, is so that the internal candidates, the employees, were able to take advantage of that program. And so my guess would be is that anytime the stock gets to about $2,000 or so, Tesla's gonna have no choice but to split. Otherwise, a large percentage of the workers that work there are not going to be able to take advantage of this program. And that doesn't seem fair, right? Those that would earn the most would be able to get a 15% discount, and those that earn the least will not be able to earn a 15% discount. It doesn't seem right, and I'm pretty sure Tesla would agree with that. So does that necessarily mean that they're going to split multiple times this decade? That's the case if we think the stock price is going to go much higher, right? So let's use a quick example here. So Elon has been very open about saying that Tesla's goal is to ship 20 million cars by 2030. So 20 million vehicles, okay? Let's take that number and then assume that those vehicles are being sold at an average of, say, $45,000 per car. Couple things there that we can talk about, but essentially what we can say is a new car is going to come out that's going to be cheaper, which is going to bring the average sell price a little bit lower. But then you have things like Cybertruck and other things that are being probably brought to market that are going to be at a higher price than the $25,000 car model. And then you can also assume that with inflation, you're going to have increases in pricing naturally because of how inflation works, right? So then if you take those 20 million vehicles and you apply $45,000 per car sold, that's roughly $900 billion a year in just revenue. Now, assume that Tesla is able to make a 20% net income on that revenue. So meaning 20% of that revenue goes directly to profit. And if you look at the most recent quarters and what Q4 is going to be here, probably in the 17-18% range, it's probably very safe to assume that in 10 years' time, Tesla's going to get 2 points better, okay? So let's just assume they're able to make a 20% net income percentage in 2030. You take that $900 billion revenue number, you apply a 20% net income percentage ratio on that, and then you end up with $180 billion in profit every year. And if you apply a 25 price earnings ratio, which in my mind would be a very fair price earnings given the size of the company and the technology it's going to have in 10 years time, then you take that 180 and times it by 25, and then you arrive to a $4.5 trillion market cap by 2030. Now, that's just for cars, right? That's just cars sold. We're not thinking about full self-driving. We're not thinking about energy. We're not thinking about the bot. We're not thinking about any AI advancements, any other markets that Tesla is going to get into. So anything else that we talk about from that front, it's just additional, right? It's more and more market cap theoretically that would be applied. So even under that basic scenario where Tesla does make 20 million cars a year and they're able to sell it at 20% net income, the market cap's already going to be at 4.5 trillion, which is 4.5 times where we are today. Today we're about $1 trillion, and then in 10 years' time we'll be 4.5 times higher than that. And so right there, the stock price, given that market cap, will be roughly $4,500. And then if we go back to the ESPP example where I lay out what each percentage would look like, take the highest getter, take the 15% guy, right, or gal, $2,800. That will not be nearly enough for the highest saver of the average Tesla employee to get anywhere near close to being able to buy the stock at a $4.5 trillion valuation. And again, that's just cars. And so using that very basic, very likely scenario, Tesla will have to split at least twice. Now, what's really fascinating to think about is how Tesla decides to split the price is going to give us a lot of indication into what kind of message they're sending to the markets. So let's say it gets to $2,000 or $3,000 a share, and then they split 5-1 like they did before, okay? The message I get from that is that Tesla is not expecting or is not sending a message that says that they expect the stock price to go much higher too quickly. Because if they did a 5-1 split and then the stock price goes back up to $2,000 a couple of years later, then that means that they're going to have to split again because no one in the company, essentially, is going to be able to take advantage of the ESPP. But let's say they come in and they say, you know what, we're just going to do a 20-1 split. So instead of doing a 5-1 where it divides the price by 5, we're going to do a 20-1, which is going to divide the price by 20. And if that happens, I think part of the messaging that Tesla would be sending is that, hey, we expect the stock price to grow quite a bit here in the coming years, all right? And we're doing a 20-1 because we want employees to always take advantage of our ESPP regardless of how high the stock gets, right? Because if you can get the stock price down to, like, say, $100 through a split, then really employees should be able to take advantage of that stock purchase program for a long time. You know, it could 10x, it could go to $1,000, and then you would start have a fair number of folks being able to take advantage of that program. But if I'm a betting man, I don't think the 20-1 split happens. I think the 5-1 split is much more likely to happen, only because it's a lot more consistent to the kind of tone that Tesla has had as of recent, you know, sort of sandbagging nature, very conservative. Hey, we're going to grow 50% year over year. Oh, by the way, 2021, we're going to grow by 87%. 2022, we might grow by 60, 70, 80% again, right? 20-1, I think, sends a much more bullish or aggressive message than Tesla, I think, will be more than comfortable with. So the 5-1 split is very likely. And because of that, you know, given where Tesla's trajectory is going as a company and as a stock price, using that very basic example I gave of the $4.5 trillion market cap, and then if you layer in those other opportunities, really the sky's the limit from a stock perspective, expect these 5-1 splits to happen multiple times this decade. I think it's within Tesla's best interest to ensure that their workforce is able to take advantage of that awesome perk that they have working there. And if it ever gets to a point where it's too prohibitive and the employees, the majority of the employees can't take advantage of that, I think that sends a really bad message internally. Those that have the most money can get a savings. Those that don't have the most money can't get the savings. Not a good situation to be in. And I applaud Tesla for their initial stock split that they did not too long ago. Working there, I heard it. You know, I worked at a warehouse and we had a lot of folks that weren't able to take advantage of the ESPP because of how high the stock price got. And then, you know, Tesla was very quick in releasing that split and saying, yep, we're going to lower it to about... And then Tesla was very quick in saying, yep, we're going to split the price so that, you know, we can take advantage of the stock price. And that made people very, very happy. So I think that will continue. And if you're somebody who thinks the stock price is going to go to 5,000, 10,000, 20,000, 50,000, 100,000, pick a number. Tesla is going to continue to go through those splits to make sure that their employees are able to take advantage of that awesome, awesome program. I hope this video was helpful. If you enjoyed it, I would love it if you throw me a like. If you want to see more content from me, subscribe. I have a Patreon if you want to become a patron. I have a link for that in my description below. And then you can also join my channel by clicking on join below. Thank you very much for stopping by. I hope you have an amazing day and we'll see you on the next one. Bye-bye. Boom. Everything about Texas, the barbecue. At least everything about Texas, the allergies. Ugh, hate them.